Okay, uh, good to see you again, right? Okay, I would believe that you've been observing that in our practical classes we've been doing, after you know the background, and then we look at illustrative questions. Most times we take it up from trial balance and all that. Okay, so I was thinking that we should look at how to build the accounts up to, you know, trial balance. So what I'm trying to say is that, of course, your trial balance is the list of balances for a particular period. So after you take all your transactions, you buy, you sold, you paid this, you got cash, as those transactions are happening, of course, you're capturing them in ledgers. I already told you that your transactions are captured in various ledgers, and at the end of the day, your ledger either settles based on its behavior, either as an asset, as a liability, as an expense, or as an income. Okay, so I've explained this earlier that your transactions, when you capture them in your ledgers, of course, at the end of the day, they either fall into any of these, header. All right. So what it means is that we should understand how to, capture transactions in monetary terms as they happen. For instance, when you pay salaries, what do you do? When you make sales, what do you do? When you make purchases, what do you do? Okay. So it is these steps that we take that make us build our ledgers or build our accounts up to what? The trial balance. So by the time you build your ledgers or your accounts based on transactions happening day by day, okay, by the time you finish build up your account based on transactions that happen for a particular period, at the end of the day, you streamline them to what? To ledger balances. So those ledger balances, you now categorize them either as an asset, as a liability, as an expense, or as an income. You now put them in a trial balance form. It's from this trial balance that you prepare your income statement, your statement of financial position, and then you proceed to prepare other statements. Of course, in the volume 2 of my textbook, I'll be looking at other statements, and then we have more of industrial questions from an accounting perspective. Okay, so now the bottom line, or what I'm trying to achieve in this class, is to make us understand how to build our account from the transactions that happen from day to day. Of course, if you are working in a software environment, maybe you use QuickBooks, you use Peachtree. Of course, Peachtree, I think now Sage, and then maybe you use Dark Easy, Tally, and all those accounting software. As a matter of fact, there are some guys that are, that are experts or specialists in, writing codes, okay, to suit a particular accounting system. All right. So it means that if you're using an accounting software, of course, you can, tailor it to suit the way you want your report to appear. So it means that the software will help you capture the transaction, take it to the ledgers. Of course, it will be communicating with you based on what has happened, and then once it pops up a dialog box, tell it what happened. It will take the transaction from you, post it to the various ledger, even up to trial balance, and even up to extracting your income statement and your softwares do that. Up to value-added statements, cash flow statements, analysis, softwares do that. Okay, but my own point is, of course, the software will help you do that, but you should understand how the software is doing it. So with that understanding, you will be able to tailor the software or manipulate the report that the software is giving you to suit the specific needs of management from time to time. Because management sometimes, demand for various reports depending on how, its risk behavior is. Okay, so you might not be able to get all those reports if you don't understand how these things work behind the scenes. So I advise you to also understand how they work. So even if you're in a software environment, when the report pops up, if you need to make adjustments, you make them based on an understanding of how it works, not based on, uh, some haphazard understanding. All right. So not to waste our time, I'll pick just like few transactions and explain what happens, and then we proceed to the question. And then of course you can take a class on double entry principle. That's what you're going to be doing. We're going to be using here, because that's what the software uses anyway to build your accounts. And then you should also understand that you can also build your chart of accounts even if your software is giving you samples. It's okay for you to build your chart of accounts. Okay, so when you do that, it shows an understanding of how it works. Okay, so of course in the subsequent classes, I'll find time, to teach a class on how to build chart of accounts, using softwares. I'm going to pick one or two accounting softwares. I'll teach how to use them. Okay, how to build your, how to set up your organization, how to set up your chart of account, and how to dialogue with the software, to carry out various postings, and how to extract your reports based on the needs. Okay, so follow up. I'll drop the class on accounting softwares, soon. All right. So let's proceed. Now, as I'm saying, of course, at this level, you understand that your assets, when you identify an asset, there can either be an increase or a decrease. When it increases, there's a debit. When it decreases, there's a what? Credit. When you identify a liability, it can either increase or decrease. When it increases, there's a credit. When it decreases, there's what? A debit. An expense takes the same behavior like an asset. Increase your debit, decrease your credit. Income takes the same behavior as what? A liability. Increase your credit, decrease your what? Debit. So when a transaction happens, you have to what? Identify the ledgers in that transaction. Let's take for instance, we paid rent, okay, in cash. Of course, you can see that we're having a transaction here. Let's give it a value. Let's say 10,000. Okay, let's be more realistic. Let's say 1 million naira. Okay, for rent. All right. Now what has happened? We have paid rent in cash. All right. So from this transaction, we are spending cash. So that means the cash that we have will decrease. This rent is an expense. We are increasing our what? Expense here. Cash. Remember your assets. Your assets are what? Your resources, in the layman's language, used, okay, for productivity or to generate more income. You look for money to invest in the business so you can get more money. So your cash in this case now is what? An asset. So what's happening to the cash? You spent cash. What's happening to it? You can see that cash is what? Reducing. If you're having 10 million in the bank and you're spending 1 million out of it, what has happened? It has reduced from 10 million to what? 9 million. So your cash here is reducing. So what do? You credit. You see that when asset decreases, what do? We credit. Rent here is an expense. Did you pay for rent earlier? No. Now you're paying rent of 1 million. So your rent is increasing from nothing to 1 million. And when expense increases, what do? You debit. You can see what we said here. Increase your debit, decrease your what? Credit. So from this transaction, we were able to identify an asset item decreasing for a credit, an expense item increasing for what? A debit. So this is a double entry. So in every transaction, you identify two ledgers at least, and then what happens? You debit one and credit the other based on the way they are what? Behaving. Let's take another transaction. Okay, we sold, okay, goods for what? Cash. Let's say 15 million. Okay, so So what can you identify? What are the ledgers you can identify from here? When you make sales, of course, that's an income, so we call it sales. So what happened to your sales? You didn't make any sales, now you're making sales. It has increased now. So there's an increase. Now you sold for cash, that means you received cash. So what happened to your cash? What happened to cash when you receive it? Also increasing, right? So here we know that cash is an asset. When it increases, what do? Debit. So we're debiting cash. Sales is an income, right? When it increases, what do? Credit. You credit what? Income. So you can see that there's a credit here and there's a debit here. Okay? So now it means that in this transaction we have applied the double entry principle. So you have to be conversant with the double entry principle. That's what will help you to build your ledgers or your chart of account as transactions happen. Okay? And then by the time you balance all these ledgers, you extract a trial balance. From trial balance, you prepare your income statement. Okay? So let's take another question. Let's say we invested 10 million into the business. Cash. So what ledgers can you identify? Of course, there's cash. That means money is coming to the business. So if you bring money to the business, cash will increase. Cash already is an asset. So when it increases, what do? Debit. So we need one more ledger here. So you're putting money into a business. What do we call it? Capital, right? Good. So this is the capital now. I'll call it capital. So where was capital for? Capital is what you have used to what? Increase, the capacity of the business, or what you used to start the business. So technically, we can say that the business is owing you, because if you look at the accounting concept of entity, we're trying to say that the business should not be seen as the owner, and the owner should not be seen as the business. So when you put money into the business, don't take it as your money. It becomes the business's money, which the business is owing you. So you expect to use the money to make more money so the business can pay you. So, of course, you have to understand that your money is not the business money is not your money. So you have to be able to call it entity concept. Take your class on accounting concept and convention on Jadus Consulting. Take your class on double entry principle on Jadus Consulting. They are all free. Of course, we always, accept cash supports. You can pay into the account display. Okay, so here we can say capital. Capital in this case now is a liability. Of course, liabilities are what the business is owing. The business can either owe the owners or owe outsiders. So they are all liabilities. So capital falls under what? Liability. Now, you're putting 10 million into the business. Cash has increased. Now, the business is owing you. What the business is owing has also increased. So capital has also what? Increased. So if capital is liability and liability increase, what do? We credit. So it means that we've seen the credit here, we've seen the what? Debit in this transaction. So we can assume that, not even assume, we can conclude that what? This transaction has two accounts, capital and cash. Cash is increasing your debit, capital is increasing your what? Credit. So if you understand what happens at increase or decrease for asset, liabilities, expenses, or incomes, it makes your what? Your ledger build up easy, or your account build up easy. Okay? So basically this is a background on trying to build up transactions, or build up ledgers rather, or accounts, with happenings. Of course, when I mean by happenings, I mean transactions. As a business, what are you there to do? To either buy or what? Sell. So of course, when you buy, you sell. Of course, if you're not selling, you're buying, or you're paying an expense. So those are the happenings, or those are the activities. And when they happen in monetary terms. So you have to be able to capture them. So we use the double entry principles to capture them into their various ledgers, balance the ledgers, get the balances, prepare the trial balance, prepare the income statement. And then the reporting angle, we're now beginning to look at what the standard is saying in interpreting one or two things as they relate to a particular organization or a particular type of business. Because that is where you have your accounting standards. And that's why you must also be conversant with it, because there are some items that they expect you to treat in a particular way. Of course, that is the recommendation, so you have to follow. All right, so that is a summary of building up ledgers with transactions. Okay, so if you have questions, you can reach me on the number displayed. I'll be there to reply with the right answers. Okay, so let's quickly take this question so we can have an idea of what we're talking about. Okay, so it's a quick one. So the following transactions were extracted from the activities of Blake's Limited for the month of February 2019. Okay, so that means the business, is an ongoing business. So of course they've been reporting, up to this moment. So now they are trying to tell us to, also capture activities and then prepare a report. So I can see a trial balance here. Of course, this is more like an opening entry or what has happened before, and this is the position before now. So I can see property, plant and equipment, share capital, cash at bank, bank loan, accumulated depreciation, payables, receivable, all right? And then that's it. Trial balance as agreed. And then we have 8th of February purchased non-vatable goods worth 12 million from Kyle Enterprises on credit. Of course, that means the business is into goods that you don't charge VAT. So that means they're not going to pay VAT as well. So we have 12th of February sold goods worth 13 million on credit to Blonde Ventures Limited. So we have 18th February 2019 received 8 million as part payment from Blonde Ventures Limited. 20th February 2019 paid Kyle Enterprises 6 million as part payment for goods purchased. 27th February paid salaries for the month worth 1 million gross. Pay as you earn as PAYE. On salaries we are calculated to be what? 151,467. Of course, if we're having payouts, and that means we'll be having pension as well. And then we have paid monthly administrative costs worth 500,000. Depreciation calculated for the month is 350,000 naira. And they're saying you're required to prepare the income statement and financial position for the month. You see, now this question, you have to build up your accounts up towards your ledgers, balancing your ledger up to your trial balance before you now even think of preparing what? Your income statement. So we're looking at that to help accountants, especially maybe our young graduates that, I don't have that much. For that is the essence of the industry perspective of the accounting classes. More like a master class, I can tell you that, because we're beginning to have questions of maybe some graduates not being able to work without supervision, or maybe some that cannot. Of course, this is the experience is something that everybody wants, and then the question is, if you don't even work, how do you get experience? So the idea is that you can be an accounting graduate now and then have an idea of how it works, not until you begin to work. Of course, with this, you have an idea of how it works. So when you go into the system, it's not that new. Okay, so let's proceed here now. We're going to look at that or this question, and then understand what we're talking about here. So of course, I'm going to still have to put this on the board to remind you that your assets can either increase or decrease. At increase, you debit. At decrease, you credit. Liabilities can either increase or decrease. At increase, you credit. At decrease, you debit. Expenses can either increase or decrease. At increase, you debit. At decrease, you credit. Okay, incomes can either increase or decrease. At increase, you credit. At decrease, you debit. So with this, we'll be able to capture the transactions in monetary terms. So who owns the business basically? So the business is owned by Blake's Limited. So we have Blake's Limited. So first thing first, let's capture the transactions. Okay, so what do we do? What's the first item here? The first item here, I can see purchased non-vatable goods worth 12 million from Kyle Enterprises. Of course, you have two items there. We have purchases. Okay, we have purchases here. And then we have what? Kyle Enterprise. We have Kyle Enterprise. Okay, and then what do we have there? 12 million, right? 12 million. So we have purchases. Purchases here is more like an expense. It's a cost, okay? But just that it's direct in this case. So what do? We have spent 12 million. 12 million there, I can see debit for purchases. What do you think? Purchases fall under expense. So if we're spending 12 million, there will be an increase. If we didn't spend, then that means there will be zero. Now if we're spending, that means it has increased from 0 to what? 12 million. So you debit the expense here. So we debit purchases. Okay, with how much? 12 million, right? Kyle Enterprise will be credited with what? 12 million, right? So the next one there, we have sold goods worth 13 million on credit to Blonde Ventures Limited. So what do you have? We have sales, right? So sales here is an income. Income will increase. Credits. How much is that? 13 million, right? We sold on credit to Blonde Ventures. Blonde Ventures, what do you do? Debit. How much? 13 million. What's the next one? Receive 8 million as part payment from Blonde Ventures, right? So that means Blonde is paying part of what? What is owing. So if Blonde pays us cash, cash is an asset. Asset will increase, right? Blonde was owing us. Debtors are also assets. What Blonde is owing will also decrease, right? So what do we see now? We're receiving cash. Cash is increasing here, so we debit cash. How much? 8 million. Then Blonde Ventures, we get what? A credit of what? 8 million. Okay? So what's the next one? Paid Kyle 6 million as part payment. We'll pay cash. Cash is an asset. It will decrease, so that's a credit. Kyle was a liability we were owing him. Now, if we're paying him, then to decrease, that's a debit. So that means we have Kyle will be debited with how much? 6 million. Then our cash will take a credit with how much? 6 million. Right? So what's the next one? Paid salaries for the month worth 1 million naira gross. Of course, you're paying salaries, right? Remember, you're accounting for what? For personnel costs. So you can take that class to understand this perspective. Remember, I told you that what? Your personnel costs, okay, is more like your what? Your salaries and what? Wages. Of course, I told you that some use what? Cost and benefit, right? Some use cost and what? Benefits. Personnel cost and benefits. So you can take that class, and I told you that on salaries, of course, we have outsource and in-source. You know, outsource, you know, give the job to someone else to help you recruit, and then you pay them at the end of the month, or you employ HR that will help you employ, you know, staff. All right, that's in-source, but that's not. Take the class of accounting for personnel cost. And then remember, I also said, you know, I mentioned that in calculating your what, your salaries, there's something called pay as you earn. Pay as you earn is called payee. Okay, or you can call it salary tax. Okay, now salary tax is a tax you take out of employee salaries and then remit to appropriate revenue service based on the state where they are. So if your staff are in Lagos, okay, you charge tax and remit to the what? Lagos State Revenue Service. If your staff are based in Abuja, of course, before now, you remit taxes on Abuja staff to what? Federal Revenue Service. But now, Abuja staff goes to what we call the FCT Internal Revenue Service. So they also have their own revenue service now. Okay? Alright? Although they get support from FRS, but then FCT now has its own internal revenue service. So based on the state, that your employees are, or that your staff are, when you deduct tax from their salaries, remits to the respective state internal revenue service. Okay? Right? Now, I told you that in computing the salaries, that there's something called pension. Based on the Pension Act, your staff are expected to contribute 8% of their gross income. And then you, as the employer, so this is for employees. Now, as the employer, you're expected to contribute 10% of the gross income as an employer. So what this means is that if your staff is earning 100,000, 10% of this, okay, which is how much? 10,000. You will contribute as an employer for pension. Employee will contribute 8%, which is 8,000. So it means that 18,000 is what you pay on every 100,000 to the internal revenue, to the what? To the pension administrator. Now, of course, the employee will determine which pension administrator that he wants. So anyone the employee chooses, please take. If the employee is saying Stanbic, go. The employee is saying ARMS, he's saying Leadway. So it depends on the pension administrator that the employee wants. They have a right to choose, and they can even move. These days, an employee that has been using Stanbic can decide to move from Stanbic to another. I guess you can move once in a year. So now, what we're even saying now is that so this 10,000 is the employer that is paying. But this 8,000 is the employer that is paying. That means you're going to take out this 8,000 from the what? Monthly gross, and then take off the tax as well. So you must understand that perspective. Okay, and then of course in computing, the pay as you earn, which I already explained, the accounting of personnel costs, of course there are exemptions. Of course, we have what we call the consolidated reward allowance. Okay, and then we have contributions. Maybe if you're contributing to health schemes, okay, or housing funds, you take that out of the what? Of the salary before they apply the tax rates. So you can take the class on accounting for personnel cost. Okay, so you know exactly what I'm talking about. Okay, so here we can see that salary is being paid. So we're going to have salaries and wages as an expense. Debit is increasing. How much? 1 million. But remember, there, according to the question, they said there's pay as you earn. There's pay as you earn of what? 151,467. So you're not paying everything in cash. So of course you have pay as you earn. That will be a credit of how much? 151,467. 151,467. And then, of course, based on this, you're going to have to pay pension. Right? Pension. The employer will pay pension, which is 10% of 1 million. That will be what? 100,000 naira. Right? Okay? So now you're going to have cash. How much are you paying? For salaries alone now. Do you understand? For salaries alone, how much are you paying? You're going to have to pay these guys, which will be 1 million less their tax and less their own pension. So what is their own pension? What is their own pension? Okay, so their pension, according to this question, will be 8% now. So their pension is 8%. So if you take out 8% of this, 8% is what? 80,000, right? So we have 1 million, okay, minus 80,000. That's 920,000 minus their tax, 151,467. Okay, I'm seeing 768,533. 768,533. Okay, so we have a debit here, 1 million. All right, And then we have pay as you earn, credit this. And then we have pension, credit this. Cash, credit this. Okay, now there's another pension. Okay, the one that the employee 80,000 is contributing. So we have pension contributed by the employer 100,000, pension contributed by the employee 80,000. Then we have cash credited, which is the difference between the salary, the tax you're taking from him, and his pension. Okay, then this pension that you credited here will also increase your salary. You have another salaries and wages here, which is what? 100,000. So basically, the employer also what? Pays pension. So you can see salaries and wages here 1 million. So pay as you earn deducted, credited. Pension deducted, credited. Okay, now this pension 100 is not one, it's not from the employee, it's from the employer. So this is the pension from the employee, 80,000. So you take out the tax, take out the what? Pension to get what you're paying him in cash. This is what you're paying him. And then you have pension that the employer is contributing, credited here. Then that will increase the salary to what? 100,000. So at the end of the day, by the time you want to pay the what? Revenue service, you pay them their tax, you debit tax, credit cash. If you want to pay the administrator, anyone that the employee choose, you want to pay them 180,000. You debit pension, credit what? Your cash. So the next one here, I can see what now? Paid monthly administrative costs, what? 500,000. So what do you have there? What do you have? So you're going to have administrative as an expense. It will increase, you debit. Cash is an asset, you decrease, you credit. So we have admin expense. How much is that? 500,000. We have cash. 500,000. So what's the next one? Depreciation calculated for the month is what? 350,000. So what do? You have depreciation. Okay, 350,000 accumulated depreciation. There's a class on depreciation, so you can take that. 350,000. So these are the journals. Of course, if you're using an accounting software, you're going to have dialogues. The software will be giving you dialogue boxes. You fill in what has happened and to do the posting. But in this case, we want to understand how to do the posting. Okay, so we've raised our journals. In fact, funny enough, if you don't want to use the dialogue box on accounting software, you can use journals to post. It will still do the same thing. Okay, there's a journal dialogue box. You can use them to post. So we have these are our journals. Now let's open the ledgers, post into the ledgers, we balance up, extract the trial balance, and prepare our what? Income statement. Okay? So let's start. So what do we have here? What's the first thing? We have purchases. How many purchases do we have here? One. Just one purchases, right? So let's take this off. So I'm starting from here. So we have purchases account or purchases ledger. Credit, debit. We have purchases here. What's the date? 8th of February. So we have 8th of February. Of course, it's a debit. So against what? Kike or Kai. So we have Kai. How much is that? 12 million. Okay. Is there any other thing? No other purchases. You can see no purchases. So you balance up your purchases. So what do you have? Balance carried down 12 million, right? So it means that you have it brought down of 12 million. All right. So we have Kai. Kai is the next item here. So we have Kai. Let's go. So we say what? Kai Enterprise. Kai here is credited against what? Purchases. So you come to the credit side. That's 8th of what? February. So we have purchases. How much? 12 million. Okay. So is there any other Kai here? There's a Kai here, debit against cash. So you come to debit side. What's the date? Receive 8 million as part payment from paid Kai. That's 20th of February. So we have 20th February. Cash. How much did we pay Kai? We pay Kai 6 million. So we have 6 million. Is there any other Kai? You can see there's no Kai here. So that's just the only item. So the balance of, you can see that 12 million here is higher than this. So we have a balance carry down. That's the last date, which is 28th of February. There's a carry down of 6 million. So both sides become 12 million. So you have a brought down of what? 6 million. So when your brought down is in the credit side, what it means is that we are still owing Kai 6 million. So if we are still owing Kai 6 million, it means Kai is a creditor or Kai is a payable. and payables are liabilities. Okay? So what do we have there? The next one, your sales. You can see your sales there. How many sales do you have here? Just one. Any sales here? Okay, remember this salaries and wages is debit. So we have sales. Just one sales. So we have sales. Your sales is against Blonde. Remember we sold to Blonde on credit. So what's the date? 12th of February. Okay, so we're crediting sales against Blonde. So 12th. So we have Blonde. How much is that? 13 million. Right? Any other sales? No sales. So that means you're going to have a carry down of 13 million. So brought down here is what? 13 million. Sales here is an income, remember? So that's credit. So the next one here, Blonde. How many Blonde do you have here? We have Blonde here, debit. Okay. We have another Blonde here, credit. So let's open Blonde. The first Blonde is debit against sales. So we'll come here. 12 February, sales. 13 million. What's the next Blonde here? Against cash, credit. What's the date? Received 8 million. That's 18th. We have 18th February. Cash. 8 million. So let's balance up. 13 million minus 8. So we have balance carried on here. 13 million minus 8 million. That's 5 million, right? So we have 5 million. So both sides becomes 13 million. 13 million. So brought down here is what? 5 million. So it means that what? Blonde is owing the business 5 million. So you can call him a debtor or receivable. Okay? So what's the next one here? We've done, so let's do cash. How many cash do we have here? 1, 2, and 3. let's do cash. So we have cash account here. Okay. So now let's go. Remember, there is a cash in the trial balance. 25 million. So we have a balance brought forward. 25 million. So what happened there? We received cash, okay, from Blonde, right? That's when 18th. So we have 18th February, we have cash. How much did you receive there? 8 million. Right? Another cash here. There's a cash here. We paid Kai. What date is that? What date is that? 20th. We paid Kai. So we have 20th February Kai. How much did we pay Kai? 6 million. So we've done two cash there. First cash, the second cash. Another cash, there's another cash. We paid salaries. Okay? What's the date for salaries there? Paid salaries, right? 27th. Salaries. How much did we pay? 768,533. 768,533. We have 1, 2, 3. Right? 1, 2, 3. So that's it for cash. So let's balance up. Well, there's another cash we paid admin expense on the 28th. So we have 28th. We have admin 500,000. That's it. So let's balance up our cash. Let's balance up our cash. Okay, so let's proceed. So let's balance up here. We have 25 million. 25 million plus 8 million. This is 33 million. Okay, so 33 million minus all this. Okay, minus 6 million. Minus 768,533 minus 500,000. So we have a carry down of 25731,467. So it becomes 33 million. So you have a drawdown of 25731,467. So we've done cash, we've done Blonde, we've done Kyle. Yeah, we've done cash. So let's do salaries and wages. So we have salaries and what? Wages. So we have a debit here, right? So what's the date? Paid salaries, right? So we have salaries here. Of course, we have pay as you earn. How much? 151,467. What do we have again? Pension. How much? 100,000. And then we now have what? Cash. 768,533. So this is the breakdown of the 1 million. I already explained that. So if you have issues, you can go to Jado's corner to take class on accounting for personnel costs. So you understand what we're doing here. 151,467 plus 100,000 plus 768,533. No, excuse me. The pension from the employee is 80,000. The 100,000 is for the employer. Okay? Or we can leave it. Anyway, let's leave it now. So we have 100,000. Then the other one for the what? Employer. So the employee now can come in. Do you understand? So this is for the employer, this is for the employee. Right? So plus 80,000. So that's what? 1,100,000. So we have what? Carry down of 1,100,000. So both sides becomes 1,100,000. So that's an expense brought down 1,100,000. Okay. So we've done salaries and wages. So pay as you earn. Let's do pay as you earn. Pay as you earn. So you can see from here, right here, salaries and wages. How much? 151,467. If you have not paid, then it's a liability. Okay. So what's the next one? Pension. Let's do pension. So we have pension. Employer. How much is that? Or let's say salaries and wages, okay? How much? 100,000. Another one is here, salaries and wages, 80,000. So the total pension is what? 180,000. So we have carried on 180,000. So both sides becomes 180,000. Okay, so we've done pension, we've done cash. Cash is there. We've done salaries and wages. Admin expense. Have we done admin expense? No. Let me do admin expense here. Admin expense here. So that's against cash. So we have cash. Yeah, so you can look at the dates. I'm trying to be, I'm working with time, so that I'm doing the date out now. Of course, every transaction has a date, so you should put the date there for true. So we have cash here. How much? 500,000. So, of course, you have carried down here to be 500,000. Brought down, it becomes 500,000. Okay? So the next one here, we have depreciation. And for this, admin here is debit, cash here is credit. And you can see that in cash, where is your cash account here? Cash account will pay to admin 500,000. That's credit. The corresponding debit is what you're having here. Remember, I told you that in every transaction you have two entries. So, depreciation. You have depreciation here. Then we put depreciation. Let's see. Okay, let's do depreciation here. So we have accumulated depreciation. How much is that? 350,000. So then here we have accumulated depreciation. So we have depreciation 250,000. So this is the debit. This is the what? Credit. Okay. So with this, we can now prepare the trial balance before we prepare the income statement. Okay. So I can take all this off. We can just check. Purchase. Have we done purchases? It's there. Have we done car? It's there. Have we done sales? It's there. Have we done blonde? It's there. Have we done cash? Yes, it's there. Have we done blonde? Yes. Car? Yes. Cash? Yes. Salaries and wages? Yes. Pay as you earn? Yes. Pension? Yes. Cash? Yes. Salaries and wages? Yes. Admin expense? Yes. Cash? Yes. Depreciation? Yes. Yes. So we can take all this out to prepare our trial balance. Okay? Let's do the trial balance now. So we'll say trial balance. Remember, we already have some figures. Debit, credit. We already have some figures. So what do we have here? Property, plants, and equipment. So property, plants, and equipment. Debit, 35 million. Right? Share capital. What do you have? Credit, 10 million. Right? Cash at bank. So that's bank. Bank has changed. What's the new bank balance? I can see 25,731.5, right? What do we do now? You know, this is going to be approximation error. If we had space, we had just written everything in full. Okay? But let's do approximation. So we have 25,731 point, this is 0.5. So it can be 25,732, right? So cash should be 25,732. Okay? All the thousands up there. What's the next one there? Bank loan. There's nothing on bank loan, so we can just take it straight up. Bank loan is what? 36,500. 36,500. What do we have now? Accumulated depreciation. So we have accumulated depreciation. So we have one here. 350. 350 plus, what do we have there? 15 million. That will be 15,350,000. 15,350,000. Okay? Payables. Payables. What we have payables? Payables here is 10,500. Remember, we have Kai. Kai, we are still owing Kai 6 million. So 6 million, okay, plus 10,500. What do you have? 6 million plus 10,500. 16,500. So payable is now 16,500. What's the next one? Receivables. Remember blonde. Blonde is owing us 5 million here. So receivables there is 12 million. 12 million plus 5 million. What do you have? 12 plus 5. That's 17 million. So receivables here will be what? 17 million. Okay, so what other item? That's all. So we pick from here. We've picked cash. Have we picked salaries and wages? No. What salaries and wages? 1,100,000. So we have salaries and wages. 1,100. So what else? Pay as you earn. So we have pay as you earn. What's there? And do 151. Approximately 152. Right? So we have 152. Okay? Pension. Okay? What's the pension there? Pension here is 180,000. Okay? What else? Purchases. That's a debit there. 12 million. Car, we don't car. Car is part of payables here. And then we have sales. What are sales here? 13 million. So we have 13 million. Right? So done here is part of receivables. Admin expense. We don't admin expense. No, so we have admin expense. How much admin expense there? 500,000. So we have 500. So what have we not done? We've done admin, we've done sales, we've done click, we've done purchases, we've done cash. Okay, we've done salaries and wages. We've done pension. We've done accumulated depreciation. Then depreciation was at 350. So let's add up our trial balance before we prepare our income statement and then the statement of financial position. So here we have 10,000 plus 36,500 plus 15,350 plus 16,500 plus 152 plus 180 plus 13,000. So I have 91,682 here. 91,682. So let's try here. We have 35,000 plus 25,732 plus 17,000 plus 1,100 plus 12,000 plus 500 plus 350. 91,682. So we have 91,682. So you can see that the trial balance has agreed. So with this now, let's quickly prepare the income statement and the statement of financial position. So we'll not be using notes because of space, but I'm sure by this at least you understand what we're talking about. So let's go. So we have income statement for the what? Month of what? February. So let's go. Turnover here, I can see sales. What was the sales? 13 million. Cost of sales here, which is your purchases. According to these questions, what's your purchases? Purchases here, 12 million. So if you take this out, what do you have? 1 million. So this is your what? Gross profit. So we have total expense. So what's your total expense according to the question? What are your expenses in the question here? Salaries and wages. What else? Admin expense and depreciation. These are your expenses. I'm doing it because of space. Or that I've used notes to explain it. Okay? So we have 1,100 salaries plus admin expense 500 plus depreciation 350. What do we have there? 1,950. We have 1,950. So there's a loss. So we have net profit or loss. Loss is when your expense is more than your what? Income. So I can see loss of 950 here. So with this, we can quickly prepare our what? Statement of financial position. Alright, so this is the question. Remember, the question did not actually ask us to prepare statement of financial position, okay? I guess it was a slip of tongue there, but then you can as well attempt to prepare the statement of financial position if you want to. Of course, you can tell your PPE here is an asset, your share capital is a liability, bank here is an asset, bank loan is a liability. Of course, this accrued division would reduce your PPE, payable here is a liability, receivable here is an asset. This has gone to your P&L or your income statement. Pay as you earn here is a liability because you're here to pay. Okay, pension is a liability too because you're here to pay. Purchase has gone to income statement, sales has gone to income statement, admin has gone to income statement, The student has gone to what? Income statement. So you can attempt the statement of financial position on your own. If you have questions, you can reach me on the numbers displayed. Remember, you can support us by paying to the account displayed or sponsor my textbook so we can distribute to students for free. Now, if you're watching on Facebook, you're likely not to get the full class, okay? But if you want to get the full class, you can visit jadosconsulting.com to take the full class. And then if you have questions, of course, you can reach me on the numbers displayed. I'll be there to reply with the right answers. Thank you.